Coming to the stage now is Ian Purdy, Chief Executive Officer of Paladin Energy, obviously the preeminent uranium company in Australia and obviously what's one of the most fascinating and exciting commodities in the world, in our opinion. Ian's a highly respected executive with more than 3 decades experience within Australian and international natural resources companies. In his time as CEO and CFO of listed and private companies, Ian has delivered significant shareholder value through managing and optimising operations, delivering large projects and executing on business improvements and asset sales. Take it away, Ian.
Thanks very much, and thanks very much this morning for everyone's time. It's a pleasure to be back. And it's especially pleasing to see so many of our shareholders here, as well as potential future investors. So Alex Ryback, our Global Head of Uranium Marketing, and myself are here for the next few days. Please come and reach out to us, and we're always happy to talk about Paladin Energy and what's happening in the global uranium market. By way of introduction, we've got a terrific global footprint of uranium assets. Our prime asset is in Namibia, the Heinrich mine, as you can see in the centre of the slide. We're on the west coast of Namibia, which is a uranium mining jurisdiction. There's been continuous uranium mining in Namibia since 1976, and we're a key part of that industry and a key part of the local community. We're also very pleased to have a fantastic high-grade exploration portfolio. The Michelin project up the top of the screen in Labrador, Canada, as well as some longer-term assets in Australia on both the west coast and east coast. We have a simple mission at Paladin Energy. We are resourcing a global carbon-free future. There's a lot of talk about the potential of nuclear energy and the future of nuclear energy, but I think one of the key issues that is missed is the contribution of nuclear energy today. There's close to 500 reactors operating or under construction today. Today, nuclear energy is playing a critical role in the transition to a decarbonised economy, and nuclear energy accounts for almost half of the carbon-free electricity generation in the US. The Heinrich mine will be a significant player in the decarbonisation of the global economy. The graph on the right is the emissions intensity by energy source, and you can see nuclear sits well within the other renewable energy sources. ESG is part of our DNA. We take a very pragmatic approach, and what's key to us is our outcomes actually reflect our behaviours. We measure ourselves by what we do, not by what we say. We're very pleased to have a strong ESG performance. We're very pleased with the outcomes we've achieved over the last few years, but we recognise as we move back to production, that challenge is to maintain those excellent results with increased activity levels across our operations. We're committed to leading ESG reporting. As we move back to operations, we're moving to full SASB reporting, which we're currently implementing, and then we'll return to GRI reporting as well when we come back to production in 2024. Heinrich mine. When I was here last year, I spoke about all the work we had done planning the restart of the Heinrich mine. I spoke about our conviction that we thought the uranium market would support a restart of our mine, which had been put in care and maintenance in 2018, and I'm pleased to give a very positive update today. We're off and running. We've committed to our restart project, and we're targeting production in the first quarter of 2024. We've had 10 years of production history at the Heinrich mine prior to its care and maintenance phase, starting in 2018, and we see another 17 years of production underpinned by a strong operating base and a very strong reserve base. We have our cornerstone offtake secured. We'll see peak production of just over 6 million pounds per annum of U3O8, which is our uranium oxide, and at that run rate, we will represent just around 4% of annual global production. And as I mentioned, our production's coming from a premier jurisdiction. It's a really important jurisdiction to the uranium world, particularly with the current geopolitical unrest across some of the traditional uranium fuel countries. As I mentioned, we've had 10 years of successful production history. We've delivered over 43 million pounds from our plant and our mine. And the restart scope is fairly straightforward. The majority of the works are what we classify as general repairs and refurbishment, very much akin to a major maintenance program. And we'll also be delivering some process upgrades to debottleneck some parts of the process plant and increase throughput capacity and operational availability. We're well underway. The project team is mobilised, and the construction works and the refurbishment works are due to commence next month. Looking at our production profile, 17 years of life, very similar configuration to the way the operation ran historically. Simple open pit mining, quite shallow, quite straightforward, with an alkaline leach plant. Again, very simple process, very reliable, and all of the production we produced over the last 10 years, we never missed a shipment, we never had any out-of-spec product, and we'll have the same consistency going forward. We've had a good look at our capital costs as part of our decision to restart. We've increased the capital cost of our project to $118 million US. The major part of the cost increase is cost escalation across labour, equipment and raw materials. We've also brought forward some of our key utility upgrades. We have a lot of support from the Namibian government utilities who provide water and power, and I'm very pleased to report that we have all the water and power we need, which is committed. We have the infrastructure, but we've committed to work with the utilities to upgrade that infrastructure to allow us to achieve our peak production over the 17-year life of operations. We've also strengthened our project management team and appointed an expanded EPM services team, recognising that this is a challenging project environment, and we want to make sure we're right on top of our project execution from day one. Fortunately, we're very well set up with $177 million US in cash today. Marketing update, as I mentioned, we've got our cornerstone counterparties in place. We've signed up with a leading US utility, the #1 nuclear utility in the US. We're also signed up with the #1 nuclear utility in China. Those offtakes provide us with long-term security and give us the confidence to restart the operation. We've expanded our uranium market team. We have expert representation not only in Europe but also in the US as well. And we're continuing to engage in bilateral discussions, and you'll continue to see the evolution of our contract book as we report quarterly on our progress. Uranium market. There's a fundamental structural supply deficit with growing demand. This graph is from TradeTech, one of the leading analysts and commentators on the uranium market. They've increased the deficits from prior years' estimates, and what's evident from the slide is the current primary uranium supply, including all of the restarts like ourselves, which are the green part of the columns, are insufficient to meet consumption, not only today but into the future. There's an annual average deficit of some 40 million pounds per annum out for the next decade. Term contracting volumes are on the rise. What's held back the uranium industry for the last decade was a lack of term contracting. You can see from this graph that since 2013, term contracting has been well below consumption. Utilities have been living off stockpiles, but in an environment of rising prices and shrinking secondary supplies, particularly out of Russia, this is no longer a viable option, and we're set for a record year of term contracting. Ultimately, it's all about the price. This price graph shows the spot price as well as the long-term term price. Both prices are very important to the uranium industry, and both prices play an important part in our contracts as well as other producers' contracts. You can see from the graph, we've seen that strong improvement in both the term price and the spot price over the last 12 months in particular. And as you can see from the projections, which are from the two leading uranium commentators as well as a broker consensus, for the first time in probably the last decade, all parties are consistent in their belief that the uranium price will not only stay at current levels, but will significantly improve over the next 5 years. Some recent activities in the uranium market. We've seen massive disruption to nuclear fuel supplies with the Russian-Ukraine situation. There's a disproportionate amount of nuclear fuel comes from Kazakhstan and Russia, and that's put the nuclear utilities in a difficult position where security of supply and source of supply is suddenly a more pressing issue than price. Price has been driving the utilities for the last decade. That is no longer the case. And we've seen the strong increase in term pricing, and utilities are paying a premium to receive product from independent jurisdictions like Namibia. The financial players have significantly altered the uranium market. They've brought a level of transparency and liquidity which wasn't there previously. And China continues to be a major force in nuclear energy, with some 150 nuclear reactors committed for construction over the next 15 years. Just briefly on exploration, we have a very large portfolio. The message I'd like to give today is we're back. We're starting exploration and development activities at our Michelin uranium project, a high-grade project in Labrador. We're looking at a dual-track process. We'll be reworking the 2009 concept study and looking for a staged development pathway focused on the shallow material, recognising we've got very extensive tenements with a lot of opportunity. The exploration pathway, we've commenced activities in Michelin. This year's focus will be airborne and fieldwork activities ahead of a drilling program in 23-24. In conclusion, we're very pleased to be returning the Langer Heinrich mine back to production. The project is approved, fully funded and underway. We've got a low-risk restart project with a well-defined scope and a very strong execution team in country. First production will be in Q1 2024. We have our cornerstone offtake secured, and we're seeing a very strong improving uranium market. We've been very focused on getting leading global counterparties, and we're successful in that venture. There's structural supply deficits and growing demand, and our global marketing team continues to bring opportunities to the company. We're fortunate with our balance sheet strength, and we'll maintain our financial discipline. $177 million US cash in bank today, no corporate debt, and a very disciplined approach to growth, which will provide future optionality and value for our shareholders. And finally, we're part of a sustainable future. We will be resourcing a carbon-free future. We are committed to delivering value through sustainable development, but we will never lose our focus on delivering shareholder value. Thank you very much.
Great, thanks very much, Ian. We've got a minute and a half or so of questions. I can see Brett Hucker down the front. Stand up, Brett.
Thank you very much, guys. Ian, very interested in the contracting discussion and your comments there. I was just hoping you could expand on the demand that you're seeing for your pounds, firstly, and then secondly, just to talk the broader market activity levels. Have they accelerated, and what are you seeing?
Yeah, thanks, Brett. We're seeing very strong engagement for us as a company. Two reasons for that. One is our status. Now that we are returning to production, it's opened the door for us to have bilateral conversations with our customers. That's a big change. As an aspiring producer, that's quite a difficult market to get access into, to actually land a contract. But now we are returning to production. We've had strong engagement not only in the US but also with Tier 1 counterparties in Europe as well as Asia. Secondly, with the disruption from the Russian-Ukraine situation, there's been a major disruption to enriched material, which is occupying a lot of attention of the utilities. That's the value-added project that goes into the nuclear reactors. And we see that cascading down to uranium supplies, particularly with utilities now questioning their ability to get secure supply from Kazakhstan and other jurisdictions that are affected by the Russian conflict. So there's a lot of focus on independent uranium supply. There's a lot of activity happening, but we're maintaining our discipline. We're walking away from a lot of opportunities that aren't priced right for us, and we'll continue to be patient, and we'll continue to see opportunities and build the book over the next 12 to 18 months.
Great. Thanks, Ian. We're out of time. Thanks again.
Thank you.